Good morning, everybody. Welcome to the UK Mortgage Market Insights for the weekend in the 13th of October, 2023. I hope I find you all well. We've got quite a lot of subjects to cover in this week's episode, so let's just crack straight on with it. First up this week, I want to cover an article that was in an industry magazine talking about the buy-to-let market. So we have recently seen quite a lot of lenders decreasing their buy-to-let rates, which is great news. And there are more products available to landlords who are looking to purchase and to remortgage. However, despite those improvements, the buy-to-let market does continue to struggle, and this is primarily because of the stress test calculations that lenders are using. It really is proving quite difficult for landlords to actually get the money that they need to either remortgage their existing mortgage balance or to raise enough money to purchase a new buy-to-let property. So the buy-to-let mortgage market is proving very difficult. This was an article that we featured in where we were talking about this very subject, and really we can't see much improvement on the horizon. The best rates that are available incur really high arrangement fees, sometimes in excess of 5, 6, or even 7% of the loan amount, which is extortionate. But it seems that those lower rates are the only ones where landlords can actually make the numbers work. And that, quite frankly, to landlords is unacceptable with such high fees. That's why we're finding there's a lot of difficulty in the buy-to-let market right now. Next up, I'd like to cover an article that we featured in this week. Compare the Market, one of the UK's largest retail information sites for all things finance, reported by one of their so-called experts that those people with an interest-only mortgage shouldn't make overpayments because it wouldn't have any impact on their debt or their interest that they were charged, which quite frankly is an outrageous statement to make. Because as anybody knows, with an interest-only or a repayment mortgage, if you make overpayments, your capital is reduced, the interest you get charged is less, and therefore it does benefit you to make overpayments on your mortgage. Compare the Market, we're told, and they then quickly removed that article from their website and reported that they were actually going to investigate it to see what had happened. This is one of the reasons why, as brokers, we always say, please don't read too much into what you see on these websites. Quite often, when people are researching mortgages and finance products, they'll always see these special rates that are available because Compare the Market said so, or Money Supermarket said so. And actually, you as a client might not be able to get these products because you might not meet the criteria, for example. So please don't listen to everything that you see on these websites, and let's just hope that it serves as a lesson to compare the market. Next up is another article we featured in. I'm only going to touch very lightly on this one because there is a lot more to get through, but this is talking about protection and the fact that should people, when they take out a mortgage, be forced to take protection products. One thing that we're starting to see much more of is the use of GoFundMe. So a lot of people, due to unfortunate circumstances, find themselves in a position where they can't afford to pay their bills, they can't afford to pay for a funeral, they can't afford to pay for the mortgage. Whatever the case may be, what may ever have happened, we're starting to see a lot more use of these GoFundMe pages where people are jumping to other people's support. But why aren't people taking out protection products? Is it just because they can't afford them, or is it because they think they'll never get a use of them? And this is an article in which we featured, in which I personally feel that if somebody's taken out a mortgage, then protection products should be compulsory. Many years ago, when you took out a mortgage, it was compulsory that you took out insurance products. And I think, again, it should be now. Because let's think about it like this. You have to meet very strict affordability criteria to actually get the mortgage in the first place. So why shouldn't you make sure that you can continue to meet that affordability criteria throughout the term of your mortgage? Now, we're not saying that you should buy insurance products that you don't need. Absolutely not. We're in a very highly regulated environment. But to look at things like life cover, critical illness cover, and income protection purely for your mortgage needs is, in my opinion, absolutely essential. I know this is a very touchy subject and I would like to get everybody's opinions on it. So please do feel free to make some comments below to let me know what your thoughts are. Next up is a story that's caused a lot of controversy in the mortgage world this week. The Skipton Building Society on Monday announced the release of some products that are available only to their existing customers that are offering fixed rate mortgages starting with a 3%. Now, this is obviously a great rate. It's fantastic and it's headline grabbing. However, it comes with a chunky arrangement fee of 5%. Now, this is the bit that's caused the controversy because it's talking about the fact that if people are really struggling and they need to take such a low rate to be able to afford their monthly mortgage payments, how is it then fair to charge them such a large arrangement fee when they're in such desperate need? There's lots of argument for and against this product. I will obviously say that whenever advisors like ourselves look at products like this for our clients, we look at all options available to people. There's a whole wide range of tools at our disposal, and we will always pick the one that is financially the best solution for our clients. So, no, this product isn't great. It is innovative. The Skipton Building Society are trying to think outside the box, just like they did with the 100% mortgage. But this week, they've got a lot of flack for this product, some of which I think is completely unjustified because they're just trying to help some people. It's only for existing clients, like I say, and it's not right for everybody. So if you are considering taking a product like this, please speak to a broker, get some comprehensive advice before you choose it. Just touching briefly on a Bank of England credit conditions survey that came out this week as well, where there was talk of an increase in arrears on secured lending and also in defaults on secured lending as well. Basically saying that credit conditions weren't great and that people were finding it difficult. This comes as absolutely no surprise due to the cost of living crisis and the significant increases in the Bank of England base rate that we've seen over the last year. And all of these things are having a massive impact on people's affordability, coupled with the fact that people are coming off extremely low fixed rate mortgages onto higher rates. And there's absolutely no surprise why people are finding it difficult and they're struggling to actually afford to pay their bills. Next, I'd like to briefly cover the RICS UK Residential Market Survey that came out this week, covering September. Essentially, it suggests that the conditions in the property market remain challenging. The indicators on sales and demand for property is significantly reduced, which is something that we're seeing across the industry. There's not a huge amount of people purchasing at the moment. They say that whilst in the short term, the outlook's a little bit downbeat, things are starting to stabilize. I'm not entirely sure I agree with that because we are seeing that the sales market is still extremely slow. So I'm not convinced that what they're saying there is correct, but we'll obviously wait for the next report to see. And then it also goes on to say that there's a mismatch between the rising tenant demand and the actual lack of supply in the rental market, which is obviously causing tenants having to pay significantly increased monthly rental costs. So it is a difficult market out there. Not a huge amount of people purchasing at the moment. I mean, typically it slows down at this time of year anyway, but this is not normal. This is more down to market conditions rather than the time of year. So things are slower. Obviously, that's because people are expecting house prices to drop further. Interest rates are higher. It all has an impact on demand. Let's just hope that things do settle down and that next year things start to improve. A brief look at this week's swap rate chart shows that we are still continuing to see some steady decreases in the swap rates. If we focus our attention on the 5-year swap rate, you can see that it's currently hovering around about 4.5%, which is why we're starting to see some improved products from lenders on their 5-year fixed rates. Just this week, I quoted somebody just over 4.7% on a 5-year fixed rate at a 60% loan to value. So things are improving. It is slow, but there is also a lot of competition out there between lenders, and we are starting to see quite a lot of reductions on a daily basis. So things are steadily improving. So that brings us nicely onto the lenders this week that have reduced their rates. There's been a huge amount of emails on a daily basis coming in from a vast variety of lenders, some of which are TSB, Aldermore, The Mortgage Works, Coventry, NatWest, and Virgin. All these lenders and more have reduced rates this week, and it looks like that's going to continue for the foreseeable future. So this is great news. And that brings us to the end of this week's episode. So thanks for watching. We really do appreciate your support on the channel. If you've got any comments or any questions about anything that we've said, please do leave it in the comments below and we will come back to you. We do always appreciate your input. And if there's anything that you'd like us to cover in future episodes, then please do let us know. As always, thanks for your support. Have a great weekend and I'll see you next week. Take care.